Hey, what's going on, guys? This is Daniel, one half of the Kwok Brothers, and in this video, we're going to talk about the latest update and the latest news from our friendly neighborhood Federal Reserve. Alright guys, welcome back. This is Daniel, one half of the Kwok Brothers, and we've got a lot to talk about today in a 45-minute press conference that the chairman of the Federal Reserve, Jerome Powell. So obviously there's a lot of crazy stuff going on right now, and that's why we here at the Kwok Brothers, my Sam and myself, we're putting out a ton of content on what's going on with the stimulus, with loans, with grants, and all these different things, and of course how we as real estate entrepreneurs can benefit and be advantageous in times like this. So if you want to get more information on that, go ahead and subscribe to this video and get more videos so that you can stay up to date. And not only that, so you can take advantage of what's going on today in the market to build your wealth. Ultimately, that's what we want to do. So let's go ahead and get to it. So again, the chairman of the Federal Reserve, Jerome Powell, gave a 45-minute press conference. Now, a lot of you guys may be asking, well, who is Jerome Powell? Well, Jerome Powell is the chairman of the Federal Reserve. The Federal Reserve is very pivotal for controlling what's known as monetary policy. Monetary policy controls a lot of our global economics as well as what we do here in the United States in terms of investing, the banking system, and how it affects our lives, me and you, on a day-to-day basis. But long story short, let me give you a quick summary on what monetary policy even is. They do three things. The number one thing they do is they influence inflation and what's known as the money supply. So obviously we all know what inflation is. Inflation is the rate in which the money, or the US dollar in this case scenario, gets stronger or weaker, as known as deflation, as time goes on. But a lot of people don't talk about money supply. A lot of big YouTubers nowadays are using the inflation word, they're throwing it around, but I would argue that the more important thing that's going on right now is the rate of the money supply. Well, the money supply is not necessarily inflation because it doesn't have to do with how much or how strong the US dollar is or whatnot, but more so the flow of how that money is being transferred from one entity to another, i.e. how often is money being transferred in the stock market, the overall money supply of the overall economics. That, in my opinion, is more important right now, especially during these pandemic times when everybody just wants to keep their cash and they don't want to spend a whole lot, and a lot of consumer spending is falling down. The second thing that the monetary policy does, it does what's known as open market operations. Now, open market operations, what that is buying and selling of securities and bonds, so that way the Federal Reserve can input or take away money from the central banking system, aka the overall economy. And they do that in the form of stuff like quantitative easing, buying and selling securities, and we'll talk about that here a little bit more in a second. And they also regulate the banking system, such as late last year when the banking system was having a liquidity crisis, and we technically still are, they have what's called repo operations. So late last year, they actually pumped $500 billion worth to fund everyday operations of these large banks. That's very, very important to know in terms of what is monetary policy. Now, let's talk about and summarize what have they done the last 3 years to where we are today. Well, in 2018, they increased the rate by 0.25% or 25 basis points, a total of 4 times in 2018. In 2019, they actually decreased the interest rate by 25 basis points. That's 0.25%, 3 times. And in 2020, they took an even drastic measure turn where they actually, at first, they decreased the interest rate by 50 basis points, which is 0.5%. And then, of course, the big shocker that happened last month, they decreased the interest rate by a whole point, which is 100 basis points, to again make the money cheaper and also quote unquote stimulate the economy. On top of that, they put $500 billion in repo market operations, as we explained earlier. That's again supposed to stop in October 10th of 2019. It was supposed to be temporary, but they actually kept going on and kept going forward. And on top of that, in March 2020, they wanted to put more cash back into the banking system and the overall market. They bought $500 billion worth of treasury securities, and also they bought $200 billion of mortgage-backed securities. So again, all of these things have happened by the Federal Reserve the last 2 or 3 years, and obviously they've done so much more than that, but we're really just kind of hitting the headline. So all in all, to give you guys a good idea of what has occurred, what has happened, why we are where we are right now, in Wednesday of February 26th on 6 p.m. of this year, they actually had $4.158 trillion in their balance sheet. Now get this, guys, by the time it was Wednesday, April 22nd, 5 p.m., that number went up to $6.573 trillion. Guys, you're looking at a $2.5 trillion increase when it comes to the Federal Reserve and what they have on their balance sheet. That means that these are very unheralded times. We've never seen anything like this before. So let's go ahead and move on, guys, to the press conference that featuring Jerome Powell and a lot of the reporters that had very interesting questions, in my opinion. But the very first thing that they talked about that I heard out of Jerome Powell's mouth in that 45-minute conversation, what stuck out to me was he emphasized very, very heavily that they are actually doing loans and not grants. They're not just giving away money, but they're actually issuing loans with the expectancy that the money is going to be paid back. And I think that's absolutely huge, because we don't want to just throw away money in order to stimulate the economy, because of course at one point that number is going to be on the Fed balance sheet, and we have to ask, well, are they just going to continue printing that money? And of course we can't do that, because then we do have a real inflationary problem. Instead, they're giving out in the form of loans. So he emphasized that very early on in the press conference, which I thought was pretty good. Now, another thing that I thought was interesting as the press conference continued to move on is that he said that tough times are coming in the second and third quarter of this year, meaning April, May, June, all the way potentially even up to September or October. Now, I do think it's a little interesting because the next 2-3 quarters happens to be very influential in terms of the election, in terms of what's going on. So not to say that I'm a conspiracy theorist or I weigh in one side or the other. I just think it's very funny and ironic that that's what's going on. And here's another thing that he added in as well. The expectancy that interest rates will remain this low for a very, very long time. Now, obviously, that has a lot of its implications. And I think that out of all the volatility that's going on right now in the markets, with even your own personal finances, and for me, as a real estate investor, as a landlord, as somebody who's handling the investments and the business, I think it's a lot of risk and a lot of volatility. But I think it's very safe to say that one thing is for sure, that the federal interest rate is most likely going to be predictable and low for a very substantial amount of time. Otherwise, why would they do all these open market operations? Why would they issue out all these papers in terms of buying security bonds and also mortgage-backed securities? And they're even talking about funding private companies and actually getting equity as part and as collateral for issuing out those loans. That's the part where it scares me just a little bit, but let's go ahead and continue to move on in terms of what he talked about. In my opinion, the Fed will continue to loan out money, is what he said. There's a big push for issuing out businesses, especially these big, large corporations such as the Carnival Cruises and these big companies that are needing stimulus. There's a big push from the very mouth of Jerome Powell saying that they're issuing out credit lines as opposed to just cash stimulus, which again, I think goes back to the original argument that we don't want to cause an inflationary or a deflationary process to even bring on even bigger problems than what is necessary. All in all, the Fed will continue to loan out money, which again also addresses the liquidity crisis that's happening in the banks right now. Now, what's really interesting to me is that he said that the Federal Reserve is willing to use all tools at their disposal to make sure the markets stay open, to make sure the markets stay fluid, and until a time where there is more sustainability, again, they will do everything it takes to make sure that we survive this, quote unquote, whatever that means. So what does that mean? Well, he actually said himself in the press conference that they're willing to do whatever it takes, pretty much saying that they're going to have unlimited spending to make sure that we as the consumers, along with other entities that keep our economy alive, are doing well, they're sustaining, they're staying alive until a more sustainable time in the market comes. Now, here's what I think is also interesting in terms of what he said in the press conference, in his opening statements for that matter. He says he wants to see a bigger push and a more of a participation from Congress to also stimulate the American people, the consumers as well. I actually read an article this morning from the Wall Street Journal saying that consumer spending has dropped 7%, which is the biggest drop that we've seen since 1959. Now, obviously, that's a very scary statistic because, well, what makes the money supply healthy? Well, it's when consumers go out and they spend money. Consumers go out and spend more money. The businesses do better. That's reflected in the stock market. Investors have a wider return. And it's an overall circle of life in terms of what happens when the money supply is healthy and when it is well. So, of course, it's not a big surprise when Jerome Powell, the chairman of the Federal Reserve, is coming out saying that he wants to see more of a participation and more of a push from Congress to push more stimulus out into the people. Now, what's interesting is that side is what we know as fiscal policy. So, of course, there's monetary policy and there's fiscal policy. I encourage you guys to understand more from a 30,000-foot view what's going on, to watch videos, Google it, YouTube, what is fiscal policy, what is monetary policy, to get a better understanding of what's going on. Now, the overall news that Jerome Powell said and the overall message that I got from watching that 45-minute presser that they had yesterday is that volatility will continue and they will try and keep the markets open, and that they will do pretty much whatever it takes, use all the tools, and have the unlimited spending at hand to make sure that happens. Here's my overall thought on everything that's going on. My overall thought is, well, at some point the music has to stop and there has to be some sort of a reset. You know, as of March of 2019, we've seen the longest bull run that the market has ever seen in the history of the United States. And for me, there has to be a reset when I see statistics like a $2.5 trillion increase in the Federal Reserve balance sheet just in the matter of months. You know, I mean, that's ridiculous. That's uncanny. So there has to be some sort of reset that's eventually going to happen. Now, my thoughts on the stimulus and a lot of these grants that are coming out, and obviously Sam has been doing a phenomenal job to update you guys on how to take advantage of it and what is necessarily going on. My thought is that it will sustain the market for a certain amount of time, but unless we go into a complete socialistic community, it's very hard to sustain that type of expectation. I mean, we're seeing people where they're actually making more money from unemployment than they did working their job. I mean, even people that are very close to myself, even family members that I have, they're actually making more money at home, sitting on their butts, doing nothing, as opposed to going out and actually getting a job and working. For me, that's kind of scary. It's shady and that's not sustainable. Something's got to change. Something's going to happen. Now, my biggest thought, my biggest overall thought as I read through all these research articles, as I listen to these videos and watch these, press conferences that's being done, is that in my opinion, I think we are going to embark as real estate entrepreneurs and investors the greatest opportunity that this U.S. economy has ever seen to build wealth and to be advantageous and how to be shrewd and also make money doing so. And of course, that's not a bad thing, right? It's either you make the money or the banks make the money. And as long as you're willing to do good things and use it as a tool to help others and also help yourself, again, no hard, no foul. So of course, guys, subscribe to this video, click like on this as well, because we have a lot of videos on the how-tos on how to invest in real estate. I bring on podcasts, and also check out the First Deal Experience on Spotify. You'll see all those links in the description below. But myself, Sam, and the rest of the Kwok Brothers team will do our best to upload as many videos as we can, updating you on what's happening with the stimulus, with the economy, and how you can best take advantage as a real estate entrepreneur. I'll see you guys in the next one.